Rajiv has been investing in mutual funds, but these days he's gathering information about exchange traded funds or ETF. After research, it was found that this is also a kind of mutual fund, but it is traded in the stock market. It was also revealed that companies charge less expenses from investors, meaning its expense ratio is cheaper on the lines of passive funds. Rajiv felt that the most important thing about ETF is that it has less risk as compared to stocks. Rajiv is among those investors whose interest in ETF is increasing day by day. The same finding came out in the survey named Decoding ETF Perceptions of Mirai Asset Mutual Fund in November 2023. More than 2,000 investors from 15 metro cities and Tier 2 cities were included in the survey. 60% of the people surveyed claimed that they have a good understanding about ETFs. Now, there are two important reasons for the increased trend in the ETF market. What are those? First, liquidity. That is, ETFs can be sold at any time during the market trading period. And second, their low cost. That is, low expense ratio.
तो लोग अभी क्या चाह रहे हैं कि वो पैसिव फंड्स जैसे कि ईटीएफ में निवेश करें ताकि उनको एटलीस्ट मार्केट से जुड़ा हुआ रिटर्न जो अंडरलाइंग इंडेक्स का रिटर्न है वो मिल सके एंड साथ में ईटीएफ लो कॉस्ट भी होते हैं एक्सपेंस रेशियो पॉइंट ऑफ व्यू से एंड उसमें कोई एक्टिव फंड मैनेजर रिस्क नहीं होता मार्केट रिस्क होता है क्योंकि अल्टीमेटली निवेश तो मार्केट में ही हो रहा है लेकिन कोई फंड मैनेजर रिस्क नहीं होता है एंड इन्हीं तीन चीजों की वजह से ईटीएफ काफी पॉपुलर हो रहे हैं
So, let us understand what are ETFs, how do they work, and how are they different from mutual funds. Exchange Traded Fund, commonly known as ETF, is a method of investment in which investment is made in a set of securities, that is, shares of different companies or different types of bonds. ETFs trade on a stock exchange just like stocks. ETF is a passive investment which usually tracks assets and bonds such as a specific index, sector, theme, or commodity. The performance of ETFs is similar to these indices. For example, many ETFs track indices like Nifty, Sensex, Nifty Healthcare Index or BSE 500 and invest only in those shares which are included in a particular index, and that too in the same ratio. ETFs contain not only equity funds but also debt and gold options. There are many types of ETFs available in the country today, like gold ETF, silver ETF, debt ETF, equity ETF, index, and so on. You can keep ETF units in a demat account just like you keep shares or other securities. The price of ETF units depends on the demand and supply.
अपॉर्चुनिटीज काफी सारी है डिपेंडिंग ऑन रिस्क प्रोफाइल ऑफ इन्वेस्टर इन्वेस्टर एक सही ईटीएफ अपने पोर्टफोलियो के लिए चूज कर सकता है और वो या तो अपने कोर पोर्टफोलियो में चूज कर सकता है जैसे कि निफ्टी 50 या फिर सेंसेक्स या फिर मिड कैप 150 या तो फिर अपने सैटेलाइट पोर्टफोलियो में जैसे कि फैंग प्लस ईटीएफ है S&P 500 टॉप 50 ईटीएफ है हैंग सेंग टेक ईटीएफ है इन टाइप के भी ईटीएफ्स को अपने वो सैटेलाइट पोर्टफोलियो में एज अ टैक्टिकल एलोकेशन भी कर सकते हैं.
Now, as far as tax is concerned, equity ETFs are taxed just like shares or equity mutual funds. There is a tax of 15% on selling ETF before 12 months. If you sell the ETF after holding it for 1 year, there is a long-term capital gains tax at the rate of 10% on profits above 1 lakh rupees in a financial year. There is no tax on long-term capital gains of up to 1 lakh rupees. Tax rates will be applicable on profits made from other ETFs including gold, debt or international ETFs as per the income tax slab irrespective of the holding period. Now, it's about returns. Now, it's time to look at returns after tax. Index ETF has given double-digit returns in the last 1 and 3 years respectively, whereas gold ETF has given an average return of 12.25% in 1 year, while in 5 years it has given an average return of about 14%. These figures are as of December 19, 2023.
2024 में भी हमें मार्केट एज ऑफ नाउ काफी अच्छा लग रहा है इन टर्म्स ऑफ जो भी मैक्रो इकोनॉमिक इंडिकेटर्स हैं इंडिया में एंड जो अर्निंग्स आ रही हैं कंपनियों की उससे लग रहा है कि मार्केट रीजनेबली स्टेबल रहेगा. परहैप्स 2023 वाली परफॉर्मेंस ना रहे और इन्वेस्टर को शॉर्ट टर्म के लिए अपनी अपनी एक्सपेक्टेशन थोड़ी सी कम रखनी पड़ेगी, बट लॉन्ग टर्म पॉइंट ऑफ व्यू से इंडियन मार्केट काफी काफी स्ट्रांग लग रहा है। इंडियन मार्केट्स में भी और यूएस मार्केट्स में भी और दूसरे इंटरनेशनल मार्केट्स में भी आप एक्सपोजर ईटीएफ के थ्रू ले सकते हैं।
ETFs are more diversified, that is, investments are made in different shares in them. Therefore, they are less risky than investing in individual equities, that is, investing in a single share. Tracking error is an important term in ETFs. Tracking error is the difference between the benchmark index's return and the ETF return. In fact, it shows the difference between the performance of ETF and index. The ETF with the least tracking error will be slightly better. Less tracking error has less impact on your returns. In such a situation, investors should choose such ETFs which have minimum tracking error. Now let's talk about how ETFs are different from mutual funds. ETFs trade on the stock exchange and investors can buy and sell them from here. Whereas to buy or sell units of a mutual fund, a request has to be given to the fund house. The price of a single unit of a mutual fund is known from its NAV. ETFs do not require active management as they track the performance of a particular index and try to perform as per the performance. Similarly, this is the reason why the cost is less in ETF investment. In the case of mutual funds, the fund management or the fund manager takes investment decisions on behalf of the investors, and due to this, the fund management cost increases. Mutual funds charge around 1.5 to 3% fees annually, whereas ETFs charge around 0.1%, which is much less than mutual funds. Lower costs in ETFs result in much better long-term returns. There is no minimum holding period in ETFs. The investor can buy and sell it at any time. Whereas mutual funds like equity-linked saving schemes, that is ELSs, have a lock-in period of 3 years. You cannot exit your investment within this time period. Many mutual fund schemes have an exit load. And also, one last important thing, a demat account is necessary to invest in ETF, whereas investment in mutual funds can be done without a demat account. ETF is becoming the preferred options for those investors who want to create wealth while keeping investment costs low. Generally, investors think of investing in ETFs rather than mutual funds because the charges are less. This can be a better option for investors who take less risk. But remember, whether it is a mutual fund or an ETF, both have advantages and disadvantages. Investors should choose one of the following based on their investment strategy and risk appetite.